Folks, I've got something really hot for you today. Right now, I'm looking at two stocks that appear to be ready for a major price breakout to the upside. I'm specifically focused on stocks that may see increased demand as a result of the current work-at-home environment. The first stock is Logitech, ticker symbol LOGI. It designs, manufactures, and markets innovative peripherals that provide people with easy access to the digital world. The company's product family includes internet video cameras, keyboards, audio and telephony products, interactive gaming devices, and 3D controllers. Logitech is benefiting from the rising popularity of gaming and adoption of video equipment and conference rooms around the world. I've personally used Logitech webcams for years, and with substantial increase in demand for video equipment due to stay-at-home policies brought by the corona pandemic, we've seen a massive increase in need for webcams and other equipment that brings people together digitally. I went online to buy a backup camera the other day and found all retailers to be sold out, and used models on Amazon selling for 4 to 8 times what a new model costs. In a nutshell, that tells me the demand is strong and strongly outweighing supply. And this will continue over the next few quarters as people around the world change their social and work habits for quite some time. Fundamentally, shares have been outperforming expectations in the last 3 quarters, leading up to the corona pandemic. Moreover, 5-year earnings growth rate is 171%, and the stock has 3 strong buy ratings, which means there's some institutional attention focused on Logitech right now. The maker of computer accessories is coming off a record quarter in sales and profit, which is quarterly sales exceeded $900 million for the first time in the company history. Logitech's 3 largest categories are gaming, PC, and video peripherals, and video collaboration, and all reported strong last quarter growth. Most importantly, Logitech saw its gross margins remain firm, despite the impact of tariffs on Chinese imports. Technically, the stock is making new highs as we head into earnings on 10th of May. Moreover, there was a warning a few days back of slightly lower revenue, and price of the stock completely brushed off the negative sentiment and continued trading higher. Price has completely recovered from the April market correction, and shares continue to trade near all-time highs. Volatility levels are reasonable, making the stock a viable candidate for a long trade over the next few weeks. I believe share price will move higher in the near term due to massive demand for internet video equipment in the coming months. Now, the second stock I'm liking right now is Slack. Ticker symbol is WORK, W-O-R-K. Slack Technologies operates Slack. It's a software platform primarily in the United States and works internationally. It's a platform that sells software as a service model. Their primary competitor is Skype. Shares of Work messaging service have gained 11.89% in the past month. Investors will be hoping for strength from Work as it approaches its next earnings release. On that day, Slack, or Work, depending on whether you call it by its name or ticker symbol, is projecting to report a negative 7 cents per share, which would represent a year-over-year growth of 73%. Meanwhile, our latest consensus estimates is calling for revenue of $186 million. That's up 38% from a year ago. Looking at the full year, our estimate suggests analysts are expecting earnings of 22 cents per share and revenue of $851 million. These totals would mark a change or uptick of 35.02%, respectively, from a year ago. All in all, Slack has beaten actual earnings estimates and estimates over the past 4 quarters, which show solid growth. What impresses me about Slack is the number of analysts offering good recommendations or strong recommendations. Currently, there's 10 strong buy ratings, making the stock a darling of institutional investors. Slack doesn't have much direct competition, with the work-at-home environment increasingly becoming remote. I'm expecting the company to maintain and possibly increase its rate of growth. Technically, the stock is making a comeback. There's no doubt about that, bouncing vigorously from its low of $15 per share during the pandemic crash that took the market by storm in April. Currently, price is moving above $25 per share, and I'm expecting more upside on the horizon, especially if earnings and expectations continue to outperform. While the stock is still relatively small in terms of capitalization, there's a major demand for global communication. And if the world doesn't find a vaccine for COVID-19, the stay-at-home environment, or the stay-at-home away from work environment will continue to thrive. And that's exactly the environment Slack needs to continue trading higher over the next several months. Hope that helps. Folks, before I let you guys go, I want to let you in on something big, really big. If you need some help trading this crazy and volatile market, then I urge you to click the link below to watch my next training event. I've developed a system that works during and after huge market crashes, protecting you on the way down and delivering stocks primed to explode higher during the rebound phase. And I just identified the number one fast cash stock that could earn investors $3,680 or more within the next 14 days. In fact, this pick just crossed the 200-day moving average, and it's headed even higher. Get in on the special training event and click the button below now. Do it now.